Hello and welcome to the week ahead from the Financial Times in London. Here's what we're watching this week. Apple launches the iPhone 7 as fallout continues over its tax dispute with the EU. China is hosting the G20 summit, which will focus on global growth, and eyes will be on the European Central Bank and whether it will ease policy further. First to Apple, which is set to launch the iPhone 7 on Wednesday. The build-up to the event's been overshadowed by Apple's row over tax with the European Commission, which is demanding 13 billion euros in unpaid taxes. Apple will appeal against the ruling, but the timing is unfortunate. The launch will for the first time see a new iPhone unveiled against a backdrop of falling sales, with the new model likely to be a similar shape and size to the iPhone 6. Lex Deputy Editor Jonathan Ely has more.
Well, the launch of the iPhone 7 is far more important in the short term for Apple than the tax dispute with Brussels. That's because iPhones account for about 2/3 of Apple's sales, and for all its research and development efforts, there is no product in the intermediate term that can take its place. Now, the sales of iPhones fell actually for the first time in the first quarter of this year, and then they fell again in the second quarter of this year. And that's caused investors to reappraise Apple a bit. Its share price is basically flat this year against a Nasdaq that's up about 12%. And also competitors are more fierce than ever, and also Chinese manufacturers have got budget handsets out that are taking market share in that domestic market, in the Chinese market, which is very important for Apple. So there really is an awful lot riding on this latest launch, and Apple really does need to shoot the lights out with the iPhone 7.
The new iPhone will probably have a more sophisticated camera and wireless audio, but analysts doubt these changes will force as many people to upgrade as the iPhone 6 with its larger screen did 2 years ago. Next to China and its high-profile hosting of leaders from the G20 group of nations in the eastern city of Hangzhou. The Chinese government is keen that G20 members project a united front in their efforts to spur global growth, while deflecting criticism of structural imbalances in its own economy. The meeting will also be Barack Obama's last trip to China as US president. While he and Chinese President Xi Jinping reached a global climate agreement 2 years ago in China, Mr. Obama has also overseen a so-called pivot to Asia that Beijing officials suspect is aimed at curbing China's power. Even so, China's ambassador to the US, Cui Tiankai, emphasized that Hangzhou is where the historic joint communique of the United States of America and the People's Republic of China was signed in 1972.
杭州正是40多年前产生上海公报的地方，所以这是又一次回到一个具有历史意义的地方。我想让过去告诉未来吧，让历史给我们指出中美关系究竟该往哪个方向走。这过去40多年历史已经充分证明了，中美必须合作，必须成为一种合作的伙伴关系，也就是我们现在经常说的要建立这样的新型的大国关系。
And finally, after the Federal Reserve indicated at the Jackson Hole Symposium that higher interest rates could be coming, the focus this week turns to Frankfurt, where the Eurozone's monetary guardians are meeting to decide if they need to unleash more stimulus to boost the single currency area's economy. Recent data suggests the economy here has managed to emerge from the UK's Brexit vote relatively unscathed, but there are now signs that growth is faltering. Martin Sambu, FT Economics writer, has this assessment.
The ECB is probably not going to make any big actual policy changes. What they will do, I think, is to indicate that they stand ready to loosen policy further. They may promise to prolong their bond purchase program that's been running for a while. And there's good reason for this. One is that inflation remains stubbornly low. It's not edging up towards their target. And that's why members of the ECB have been signaling for the last couple of months that their policies are working and they might do more if they need to. And that puts them in quite a dramatic contrast with the Federal Reserve, which, as we saw at the recent Jackson Hole Symposium for central bankers, is really leaning more towards tightening rather than loosening.
And if the ECB decides to act, options include an extension of the quantitative easing programme beyond spring 2017. And that's what the week ahead looks like from the Financial Times in London. Goodbye.